50 years after Nixon ended the dollar's gold bundle, crypto revamped the world economy. Will the global economy head for the digital currency age of Bretton Woods? Sunday marks the 50th anniversary of the description of a monetary bombshell on the world financial system by announcing that the US dollar is no longer tied to the gold that effectively yanks America out of an international currency regime set up by the Bretton Woods Accord. In the 1940s, in the fight against fascism and global economic instability, the international monetary system was forged. The Bretton Woods Agreement was primarily aimed at creating a monetary system that was less rigid than the gold standard and at providing financial stability. The conference laid the foundation for the IMF and World Bank as part of the effort. Now, 15 decades later, after the system of Bretton Woods had dissolved on August 15, 1971, the monetary regime was not so different. The dollar still serves as the world's reserve currency, but the rise of stable coins linked to fiat currencies, digital central banks or CBDCs, is creating a new global regime in the era of Bitcoin and blockchain-backed currencies. Sheila Warren, head of the World Economic Forum for Blockchain, Digital Currency and Information Policy, told MarketWatch at a Friday telephone interview, there is a need for consideration of the challenges of the current financial system. Warren stated that the current monetary situation does not work effectively for enough people, and underlined economical divisions between countries as an important reason for a comprehensive Bretton Woods digital era. Ousmane Jacques Mandeng, director of consultancy boutique Economics Advisory Limited, wrote in the Financial Times column, Monday, the case for international currency has been as strong as today, but is still hard to implement. Mandeng described gold as a currency bombshell from the dollar in 1971. Between the Nixon period and 2021 there are several similarities. Inflation stepped up in the 1960s and reached almost 6% in 1970, while reserves for the world dollar grew sharply. According to the Bureau of Labor Statistics, inflation was about 5.4% over the last 12 months, down from 1.4% in 2020. However, according to the IMF Currency Composition of Official Foreign Decor Reserve Survey, US dollars held in global exchange reserves are at around the lowest level in 25 years, in the fourth quarter of 2020. The bloc reported in late May that the supply of stable currencies, such as Tether and the Circle-backed digital USDC currencies usually supported by a fiat currency or any other traditional asset, has risen by 900% to more than $100 billion in the last year. Cryptocurrencies like Bitcoin have not become widely used as a method of payment, partly because their dollar or other government-backed currencies are volatile. Crypto bulls, however, consider stable coins to be vital to expand digital currencies to daily buys. Advocates of a so-called digital currency central bank have argued that a CBDC can function in the same way as a stablecoin, but with reduced risk and government confidence. There may already be a movement towards a digital regime. Secretary of the U.S. Treasury, Janet Yellen, recently held an international meeting of regulators, including Gary Gensler from the United States Securities and Exchange Commission, to discuss the proliferation of digital assets in light of the rapids and concerns about digital currency underpinning. Stablecoins critics are saying that stablecoins pose significant financial stability risks, especially as it has been discovered algunos de esos fiat-linked tokens are not 100% backed up by current US dollars or other liquid assets, instead of a combination of the more risky assets which might bump during a market crisis. In a Friday telephone interview with MarketWatch, Kenneth Rogoff, professor of economics and public policies at Harvard University, said he can understand why the stablecoin supply has exploded. In particular, much is the uneasiness with the US controlling the rails of a world monetary system, not only the Chinese but the Europeans, Rogoff says. Rogoff said that stablecoins offer governments other than CBDCs an interesting potential use case, but but that they also present challenges for monetary policy makers. I think that regulators are careful not to use regulations as a means of protecting incumbents, especially when there is an alternative approach. From 2001 to 2003, the former chief economist of the IMF said that he believes there is much still to be done before CBDCs meet central bank requirements. He stated that CBDCs need to be transparent, speed and user-friendly in the same manner as the current system in the United States Federal Reserve. The final thing about this is, how can digital currencies be regulated so that the central bank is confident that it is your last resort lender? Rogoff said. Barry Eichengreen, a professor of economics at the University of Cape California, Berkeley, and a former senior policy advisor for the International Monetary Fund, writes in Tuesday's Project Union column. The game would be the game changer if CBDCs were interoperable. Warren from WEF stated that a lot of coordination is needed for a Bretton Woods digital era agreement, but feels like one of the largest tragedies for her generation has been the failure of a deliberate global concerted effort to date in the middle of the deadly pandemic. In 2008, a person or people identified themselves as Satoshi Nakamoto minted the first digital currency, Bitcoin. SEC President Gensler at the Aspen Security Forum earlier this month said that, at the core, Nakamoto tried to create a private form of money without any central brokerage, such as central banks or commercial banks. Rogoff, on the other hand, regards crypto more broadly as not a problem-solving solution but simply as a problem. He said on digital assets, ransomware, tax avoidance, crime, it's the Wild West. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.